A couple of days ago I made a video about Nio stock and regarding how and when they will be profitable. Will that be based on a delivery number of around 50,000 cars a month? I've got some feedback from you guys in the comment section. In addition to that, there's some updates in terms of delivery numbers in this past week. Starting with that, we can see that Nio and Xpeng are outselling Tesla yet again quite substantially now. Even Nio is outselling Tesla, I think, by a factor of 2x according to the last week. Obviously, one single week is not a whole trend, but in fact, you can still see that out of the 19 weeks that we currently have in 2025, Nio and Xpeng are outselling Tesla in China 14 out of those 19 weeks. Essentially, there's a period of 5 weeks in late February and late March where Tesla outsold Nio and Xpeng. But for the most of the year, essentially 70% of the year, the two small companies are outselling Tesla. In addition to that, you can also see that the Li Auto is in green is also doing great. I would argue that Li Auto is also outselling Tesla in China. We can also see the expectations of number of cars sold for this year and the evolution throughout the past 4 or 5 years, starting back in 2020 where Tesla was dominating quite a lot, and every single year since then they lose market share. We can also see that Tesla is abruptly, quite sharply losing market share in 2023 and onwards. The reason is that not only aren't they actually gaining market share, they're also losing absolute terms of number of cars sold, and that's going to obviously affect the company's performance going forwards. Looking at the lithium carbonate price, again, very important part for all of these companies. A big chunk of the price for the car is obviously the battery and the battery manufacturers like CATL and LG Chem. You can see that we are still going in the very, very low numbers that we have not seen essentially over the past 3 years and are almost at the lows of 2021. I believe in 2021 the lows were at around 45,000 and we were all the way up to 600,000, but now we are down to around 60,000. So it's good to see that. Then looking at the stock price, sadly for Nio investors, the likes of myself as well, is that we are still around this $4 or so US price. And I think this is the market telling the Nio management that we don't trust you. I think a lot of people, especially in the comment section, I understand the frustration, but we have to learn from our mistakes. I've never in my entire life made such a loss as I've done in Nio stock. But we have to learn from our mistakes, as I told you, and the times of trusting this management is long gone. You cannot, like, for example, I respect your point of view. You know, new refresh models, new technology will build more margins and profits. But in all honesty, we've been saying that for the past 4 years, right? Every single year there's a new, like either it's a new brand, Onvo, or now Firefly. It's a new car, it could be ET5, then maybe it's ET5 Touring, then it's ET7, then it's the updated 2023 models, and then the updated 2024 models, and now the updated 2025 models, right? Or there's gonna be like swap infrastructure reorganization where like different counties in China are helping offsetting a huge chunk of the cost, in some cases 50% of the cost. But even if the cost is offset partly in some areas of China, we can still see that the swap stations, the sheer number of them are so high. Like they essentially from August of 2024 until this moment now added almost 800 to 900 more swap stations. And the sad part about that is that the average swaps per station are still hovering around high 20s and low 30s. So basically we've barely gone anywhere in the past, let's say half a year. The break even, they say that it's 60 or so swaps per station. And all that being said, we are still at a very, very, very low utilization rate. Remember that each station in Gen 4 has roughly 23 batteries. They can handle 480 or so swaps per day. And they are doing like low 30s and high 20s. So we are nowhere near the absolute limit of many of these newer swap stations. This person here says that they cut down 10% of the workforce, they laid off managers and consolidated to 3 brands. I understand that. But the problem for me is, again, let's look at the actual numbers, right? I think last time, if you want to see more detail, you can watch my previous video that I made a couple of days ago. But let's go back to Q4 of 2024, which was the last earnings that they reported. And here's, in my opinion, the biggest part of the problem. So the revenue is obviously based on the number of cars sold. So here you can see the vehicle delivery numbers in this chart here, and Yeah, it's quite, I mean, the trend is upwards, but there are like quarters where they kind of do not perform that well. Usually the first quarter of each year, as you can see in 2023, 2024, and 2025. But all that being said, again, let's go back to Q4 of 2024 numbers and where is the big problem and why do I think it's a little bit unrealistic to say that Q4 will be profitable unless like they have a surprise card. And we will talk about what those surprises could be. But again, we know their revenue, we know the cost of sales that they reported. Then they had around 316 million gross profit, right? Now, the operating expenses is the big problem for me. So you're telling me that you have a gross profit of 300 million or so, operating expenses of 1.1 billion, of which 670 million is going from SG&A and almost 500 million is coming from research and development. Is it realistic in your point of view that Nio will cut back on research and development due to the three number of, like again, they have Nio Classic, they have Onvo, and then they have Firefly. And each of these brands, I mean, the Nio Classic only have probably 10, 12 different models, right? Onvo will have their second model and the third model coming also very soon. We are probably close to 12 to 15 models right now. Firefly has the first model out, so I would say we are close to 15 to 16 models. Correct me if I'm wrong in the comment section. It's very unrealistic for Nio to cut down on the R&D. In the best case scenario, if do a absolute monster cut down and be really efficient, let's say they go back to 450 to 420 million. That's barely 70 million reduction in R&D money, right? And in R&D budget. But they are still making 800 or so million net loss. Almost 1 billion in the last quarter, right? In addition to that, you might argue that for some reason that the SG&A will now suddenly go back to 500 million. I don't think that, because last time they had 500 million was essentially in Q3 of 2023 based on 55,000 cars sold. I think if they're gonna do like anywhere around 80 to 100,000 cars sold, the SG&A is gonna at the bare minimum be stabilized at around 600 million. I might be wrong, but honestly, if you explain, you can. I mean, it's up to you guys to convince me why SG&A budget will go down significantly closer to half a billion, which means that they're gonna cut back around 160 million on SG&A and maybe another 50 to 100 million on R&D. That's probably a saving out around between 200 to 300 million, which still puts them at 700 to 600 million in net loss. Now you might argue, but they will increase their number of cars sold. Let's go, I don't know, to 140,000 cars vehicle deliveries in my estimations for Q3 of 2026. Although I will update it. It might be that we might reach that number half a year or so sooner. But let's just go based on these numbers, right? 140,000 vehicle deliveries, and then gross profit would be around 745 million. And interestingly enough, you can see here that the gross margin is going to be 16.3%, which is higher than essentially a lot of the past quarters that we have seen. I mean, the last one was 11.7%, and it was 10.7, 9.7, and so on and so forth. So I'm still assuming increased gross margin. I'm assuming increased vehicle margin, which means that they still will make a much higher gross profit at 140,000 deliveries, 745 million. The operating expenses, you can see there at, I barely increased the R&D budget, are at essentially 510 million, not going anywhere, compared to Q4 numbers, which was 498 million, which was the last earnings, right? Then the SG&A budget, I assume that it's not gonna anywhere also, additional 12 million increase compared to Q4 of 2024. And this is me assuming that Nio will double their sales from 74,000 to 140,000. It means that I'm assuming like insane kind of efficiency in the company. And still they will make a net loss according to my model at around 400 million. So again, I've been investing in Nio for a long time. I'm not trying to be negative. I'm not trying to like change my view all of a sudden. It's just I'm essentially asking you viewers to let me know where this model is wrong, and I will update that. If you convince me that I made wrong assumptions, I mean, I can assume that I made a wrong mistake and I will change the model. But in that case, you have to give me a good reason why SG&A and R&D budget combined will be 1 billion or 900 million, which still wasn't big enough. I mean, since they made like a 900 million loss, 970 million loss last quarter, and still expecting to do at least $500 million loss, even if they deliver 100,000 cars, which is my expectations for Q3 of 2025, it's still not enough, right? I mean, and obviously no one will agree here that the R&D and SG&A is gonna be cut down by 50%. How would they even do that? Like, is that even realistic? Since we also know that historically, I mean, Nio is currently spending 2 times more money on SG&A and R&D than Xpeng and Tesla does. So they are less efficient. Now you can argue that they have many more cars. I agree. So it's not fair to compare. It's not apples to apples. But it's Nio's choice. It's the management, the CEO William Lee's choice to have this many car models and this many brands. No one has forced Nio to have this many cars and sell so few of them. For example, the expansion in Europe or even expansion in United States that some of you mentioned in the comment section. I mean, I know that in Sweden, some months they don't even sell 10 cars in the entire country. Like, think about that. They have multiple sales offices in the biggest cities in the country, which probably has 4 to 5 people working there full time in prime locations in the 2 big cities. That costs probably much more than the 10 or so cars that they sell each month. So it just doesn't make sense. And then they have already built like swap stations in, Sweden and Norway. I mean, Norway is special probably because Norway is probably the only country in Europe that they are kind of doing fairly okay. But for like, look at the German sales or the Netherlands and so on and so forth. So there's a lot of structural problem, and I think a lot of people on Twitter are starting to question the management. I genuinely hope that somehow they do a magic trick. I mean, maybe I mentioned before that maybe they do something with either that the lithium carbonate price will affect the battery cost structure somehow that we haven't foreseen, and that way they will cut cost on the number of cars, on the cars sold. Then it could also be that they play around with carbon emission credits the way that Tesla does. Remember that Tesla in the last quarter, they actually, wouldn't it be for the number of for the carbon credit, regulatory credits, they wouldn't even make a profit. Could it be something like that? But what I've tried to research is that the Chinese regulatory credit in that point of view is not going to be nearly enough for the same kind of level like the American one is in regards to Tesla. So unless there's some huge surprise, I don't see how they're gonna be profitable. But I read your comments and I'm trying to understand what you're saying. So it's not me like just not listening to your point of view. It's just like I don't see how that is possible. Now, one thing that I would agree that it's starting to become a little bit more positive when it comes to Nio is maybe that my delivery numbers are actually a little bit conservative. I mean, going to the vehicle deliveries of this past week, you can see that they starting to gain a little bit of a momentum. April 14 to 20, 6,000 cars. April 21 to 27, 8,000 cars. Then 5,000, then 6,000 for all of Nio's combined 3 brands. At this kind of rate, I mean, and usually that Nio is very strong in the second half of the month, especially the last week and a half. We are already at around 9,500 to 10,000 deliveries in the first 11 days of May. So there's essentially 2/3 of the month left. That would point to a direction of maybe, a strong month here. I would say potentially breaking all-time high. I mean, if they next week come in at, let's say 7,000, the week after that come in at also 7,000, then they do like 9 to 10,000 week in the last week of May. That's combined 24,000 cars in addition of the 9 to 10,000 now. That's probably like anywhere between 30 to 35,000 deliveries for Nio. And that would be great for Nio. Like doing 34,000 would all of a sudden put me back on the hopium kind of level of expectation, which I had previously and also some Twitter guys had. So again, it could be that my numbers are too low and we could maybe pull in a couple of these quarters. Maybe like Q2 is going to end up 90 to 100,000. Q3 is going to be maybe 120,000 and Q4 is going to be, 140,000. But even if that's the case, we see again at 140,000 during with this kind of cost structure that they have, they would still make a loss. And this is me assuming that they will be hyper efficient, like improve their efficiency in SG&A, in sales and administrative by 2x essentially, since the number of cars sold is going to double during that time period, right? So yeah, again, difficult to see. But anyways, thanks for your time. Please like and subscribe. I would really appreciate your point of view, and if you could help me to reach these 1,000 subscribers, and see you in the next one.